Folks, welcome to the Midweek Roundtable. I have my usual co-host, Jeff Zananeri here. My name is Roger Scott. I'm the Senior Strategist for Wealth Press. And welcome. Today is February 10th. It's about 8:30 in the morning. We're going to give you our opinion. This is not pre-scripted, and you guys will have a really good chance to get inside our head and see what we're thinking. Jeff, welcome.
Hey, Roger. How you doing?
I'm doing great. It's a Wednesday. I don't know where the week has gone. And I got to say, this market is something. It's
great.
So, what do you make of the current environment?
There's so much bullishness in certain sectors and certain stocks and stuff that we've been talking about. Easy stuff that's easy to see. I'm gonna pat you on the back first and talk about this small cap outperformance that you've been just ripping on for a couple of months. We've seen extraordinary moves in the Russell. You've highlighted a few stocks that have had triple digit options returns. We don't usually talk like this, but I want people to really understand what kind of abundance of opportunities there are. I've taken a different tact. I haven't really looked at the small caps as much, but I have found refuge in the cannabis space and the home builders and very obvious secular trends, just like the small caps, where we know money is flowing. We know institutions are behind the eight ball to get involved in this stuff. And, with all this liquidity, it's been kind of like a forest fire of returns in some of these things. So if you're not playing some of these names and some of these sectors, and you don't know how to be nimble and trade these things, I think you should really. We don't really talk much like this usually, but I thought it would be useful for our viewers to understand that we're not just like sitting here and opining on whether the economy is going to open or there's going to be inflation. We have opinions on those things, of course. We have to, but if you look at our services, we're nailing some of the best stuff. And I don't usually talk like this, but I think it's important for people to understand that.
Jeff, let me give you some numbers. You got to see these numbers. These are positions in my small cap billionaire breakouts that we either closed them out yet last night or we're closing them out right now. I'm not sure, but I just have the latest numbers. Don't quote me on when we closed them. CLNE, we held these for 5 days, 5 trading sessions. CLNE 384%, DDD 170%,
wild.
SM 86%, Upwork 77%. And this is just the rotation we're closing right now, and we hold them for 1 week. So that's awesome. That's 5 trading sessions. The cumulative return on those 5 stocks is 150%.
People think this is normal, but it's not. I mean, I have Canopy Growth. I have Canopy Growth and a money link, and the short is Altria, which isn't hurting me at all. And we have a quadruple bagger in 3 weeks in Canopy right now.
Right. As a matter of fact, I heard something last night that either the night before or last night that there was a huge run up after hours on earnings and all the pot stocks were really up. I'm not sure if it was the days run into each other. This
is low hanging fruit. I'm not Nostradamus. I didn't have to predict when the economy is going to reopen and how many vaccines are going to be in public supermarket next week. I don't need to know any of that. What I do know is that there is a federal mandate and adoption of cannabis that's happening right before our eyes. And you're basically at the advent of a massive, very real industry. It's not a fad. It's not beanie babies. It's not magical fairy dust currencies that might or might not be used. It's stuff people use every day for medicinal purposes. Actually, there was a huge pharmaceutical deal that went off last week, $6 billion with GW Pharmaceuticals.
Yes.
For a cannabis therapy. They're working, they're working on solutions to a lot of chronic illnesses, pain, anxiety, etc. So there's tons of uses, and it's big money chasing it. And forever, the biggest consumer economy, the biggest investment economy in the world, the United States, which also has the biggest user base in the world, has been shut to this. And now it's opening. So it's like, I'm not sitting here and saying, oh, I need to figure out, if this mall store is going to work in 2022. I don't care if people go to the mall.
No, you don't have to. No, you're absolutely right. And I couldn't agree with you more. And I think a lot of investors, you know, in all fairness, pot stocks have had a few false starts.
Yeah,
You know,
for sure.
so I think a lot of investors are like, well, is this going to be the next big run up and we're going to come in? But I think this is the real deal. I agree with you. I think this
It's
is
actually
it.
great that they've had a full start, that they've had a
Yeah.
boom and a bust. It's actually great because the same thing happened with Amazon, with eBay, with Microsoft, with every new industry has this speculative phase, then it has a euphoria phase, then it has a crash, and then out of the ashes and out of the crash, when the real fundamental winds change, comes a sustainable long-term trajectory. In my
Right.
opinion, I've seen it
Right.
over and over again.
No, I completely and utterly agree with you, and I'm seeing exactly the same thing. I
And
think
there's winners and losers in the space. They're not all going to
sure.
be great, but you know,
I think we're going to enter a period over the next year where we're going to have a lot more takeovers in the industry.
yeah,
The industry is going to become less fragmented, which is also another part of the growth stage. I think we're going to have a lot of buyouts, and eventually a very, very fragmented market is going to become extremely tight and almost like what we're seeing with the cigarette manufacturing companies. I hope not to that level. And you're always going to have some, a company here and a company there, just like craft beers and so forth.
right.
But it's a multifaceted industry. And let me remember, I'm from California. I'm from LA. We're
Right.
like 10 years into the future. Just
Yeah.
to give you guys an idea of what's to come. And I know this, again, not because we're Nostradamus, it's simply because I've seen it in LA. What I'm seeing now in Florida is like LA 9 years ago, 8 years
That's
ago.
interesting. That's cool.
Yeah. So you see, I mean, there's 2 pot shops on every corner in LA.
Yeah.
You're going to have restaurants where marijuana infused foods is the only thing that's on the menu. Drinks, marijuana infused drinks. All of these things are becoming legal. That's
Yeah.
a completely different. Now you're having the food industry involved in the marijuana industry. You're going to have. Here's another thing, Jeff. This will blow your mind away. You know how if you go to Napa Valley, they take you to they have tourism. Tourism where they show you
Yeah,
the
I've done
different
it.
vineyards. You go and you
Wineries. Yeah, I've done it. It's awesome.
yeah, of course, sure. A lot of people have. I've done it too with my wife. They have that in LA for marijuana. They'll show you different places where they grow it, how they grow it. They'll take you to these shops and then it's a whole subculture of clothing and.
But what's cool is, unlike wine's a great analogy. Everyone knows everyone knows big winemakers. They know everyone has heard of the big wineries of the world. There's a lot of famous wineries, right? But there's no like brands in cannabis. There's, like you said, that whole consolidation period hasn't really happened yet. It hasn't.
No,
it hasn't. Like people in Champagne, everybody knows Moet.
Of course.
These guys, hundreds of tens of billions of dollars they make worldwide every year with their brands. So I think we're at the infancy stage of this thing where you're going to have these super brands that come out of it. And the power of those super brands is going to be, like Moet. It's going to be like Louis Vuitton. It's going to be like
absolutely. Yeah. So we are just to tell you how far we're in this thing. We just discovered that the world is round, pretty much. I mean, we are just there. But I want to, and I like that we're hitting on sectors. I like our topic today, the low hanging fruit, if you will.
Yeah.
But I want to, just as what you said about marijuana stocks, I want to talk about some numbers on another low hanging fruit sector that we've been talking about nonstop. And folks, again, you don't need to be Stanley Druckenmiller and figure out the short-term rate with the long-term rate.
Right.
You don't need to, I mean, you could if you want to, and I encourage everyone does that. And if you have questions about that, I'll help you get there. But you don't need to be Stanley Druckenmiller to figure out that marijuana stocks are hot. But let me read you another, and we've been talking about this. None of this is going to be a surprise to you. Right. But I want to read you these numbers because they are eye-opening. So electric vehicle market, okay? Listen to these numbers. We are now, according to the industry insiders, we are now entering what they call a disruptive stage, which is probably a year ahead or 2 years ahead of the same thing we were just talking about in marijuana. So, but get this, Global electric car sales finished 2020 with 500,000 in sales, up 105% from 2019. That's 105% from a year ago. To put it in perspective, in 2019, global market in terms of electric vehicles, 2.5%. At the end of 2020, 4.2%. At the end of 2022, you know what they're expecting? 10%. 1 in 10 cars. By the end of next year, folks, 1 in 10 cars. ARC investments, and they know what they are really good at this. They're expecting by 2024, 40% of all auto sales. Tesla, Musk says 100% penetration by 2030. And he's announcing a $25,000 electric car within the next a year and a half now.
Listen, why would you fight technology? Why do you want something that's worse and old and archaic? Nobody does. Like, like when the iPhone first came out, everybody was like, what is this contraption? Like, how do I talk on this thing? It looks like a flat mirror. What am I doing with this? And then, now I'm having my, grandparents and in-laws are like, oh, like, can you put an app on the phone for me? Help me download. I want to watch Netflix on my phone. And I'm like, yeah, we've been like the same way California. I've been like, yeah, my kids, my babies have been doing this for 5 years, 6 years. They're 10 years old. They've been doing it since they're 6. Welcome to the 21st century, grandma. And it's like, it's the same thing with cars, dude. It's the same thing with cars. I was watching something, we've been on another sector, the semiconductor sector. Semiconductors are in everything. Car plant manufacturers for Buick and all these big manufacturers in the United States, they had to shut down creating cars until March because they don't have enough semiconductors to go in their cars. That's how advanced cars are nowadays. They're depending on chip manufacturing coming out of Asia to make cars in the United States. People don't even realize that.
And look at how much the main, like GM, Google, Ford, look at how much big. And when I say big, I mean the biggest companies in the world, how much they've gotten behind all of these technologies. So what I'm trying to say is this, and this is something you'll see. When I look at ETFs, I always look at constituents, the members.
Underneath the hood.
Yeah. I want to know who's in there. And you look at a semiconductor ETF or you look at a futuristic ETF, you're expecting to see like Neo, Plug, the usual, the companies I just listed that I'm holding in you're expecting to see Russell 2000 stocks, right? Or AMD,
massive growth name.
Yeah, right.
Really growth name.
Guess what's in like and Google. Google is like the third biggest holder. Tesla's the third. So you're now
one of the reasons that happens though, Roger, is because, and this is interesting. I think this is interesting. It's important for people to know that. Is because it's like the tail starts wagging the dog. What happens is those ETFs blow up in popularity, and they look at some of these small caps with a float of like 50 million shares or something, and they need to buy that stock. That's why like all my systems and a lot of your systems are based on gaming that accumulation and that need from that passive flow. So what ends up happening is they can only go, and they're called hedge fund hotels, those type of stocks. They can only go to these big stocks that they can get the size off to meet the demand for their ETF. So if they have to create billions of ETFs, they can't find enough small semiconductors to satisfy that appetite. So then they start going to second order correlations and saying, do these guys make semis? Not really, but they have them in their cars. Okay, we need that. We'll buy that stock because we can buy 1 billion of that today now. Right. So that's what ends up happening, which is you have to know these things. You have to know how to game
of course,
because it's the game within the game. That's everyone's looking at the stock market, and we know this because we've been we've been students of the game for a long time. But everyone's looking with like their 1960 fundamental book that they got at Harvard Business School, where they're like, okay, PE multiple is 25. I'm gonna wait till it turns to 17, and I want to see an EBITDA growth of 22%, and I want to see margins, and that's not how the market's pricing equities these days. It's all about flows. It's all about institutional demand. Tesla is the same thing. Tesla, why is Tesla such a big company for market cap? Because Tesla is the only large cap liquidity, what is it? ESG investment in the world. There's nothing else that you can put on Sizen that satisfies, that checks that box. That these are clean energy. These guys are, sensitive,
responsible. The whole ESG thing.
Yeah. So I didn't mean to interrupt, but it was just
no.
Sparked something in my head that's very important. So we want to front run those things with people. We want not front run, not illegally, but we want to get ahead of the curve on how those guys have to do those things.
Right. And that brings me to, but one of the reasons why I brought up this whole ETF things, and I was trying to tell people yesterday about this report and trying to put people in, and I gave them 6 top EV battery sort of disruptive tech ETFs. And I started looking at the constituents, and I was like, well, just get a couple of funds. And then I realized, hey, if you buy these two or these two, your account is going to have 18% Tesla or 18% Google, because I'm looking at the percentage of the and I'm saying, whoa, hold on, don't do that. If you're going to get this one, then combine it with that one. And if you're going to get this one, combine. In other words, don't, because you're going to have you're going to end up having, and you're going to look at it and you're going to be like, whoa, wait a minute. I thought I bought an ETF to diversify myself. I'm holding 25% Google and 10% Tesla, and I thought I was in an ETF.
Everybody thinks they have all this diversification, but in they all own like 25% Apple and 25% Tesla.
Exactly.
Across all these different products.
Right. So folks out there, be careful. Look at don't just think, hey, I'm buying a disruptive fund and it's got 70 holdings, so I'm pretty well diversified. That the 30 or 40% of those holdings are usually in the top 10 stocks. So check those top 10 stocks. You may find out it has 8% Google, 8% Tesla, 8% Microsoft, 8% Intel. And if that's the case, you're buying a lot more of that individual stock than you guys are thinking you are. So just be mindful of that. And I think that's something that readers, because I always tell people it's a good time to go into ETFs. It's a good time to go into ETFs. Be careful which ETFs you go into. Don't combine too many similar ones together.
Agreed.
What do you think about the long bond versus the short bond? The reason I'm asking is because the long bond has in fact been going higher. Lower breaking, and interest rates have been going higher. What do you make of that? Yeah.
The curve is what they call steepening right now for those people out there that don't understand it. I think that it's positive for a lot of different types of company. The banks, that's one of the reasons the Russell's done so well, is that's a positive thing for the banks, because the banks essentially a basic bank business model is borrow as short-term money as possible and lend it as long as possible. So they want to borrow overnight for almost nothing, and then they want to sign you a 30-year mortgage and know that you're going to pay 3%, and then they'll just keep that spread and then just move it out to somebody else. Very clean and simple explanation of it. But I think that the Fed, if it gets too crazy, is going to try to control the curve, because it's not good for a lot of corporate dealers, that treasuries that have to go and borrow a little bit longer term, 10 years, 5 years, et cetera. So I think that they're going to, what it's really telling us is that there's an expectation of like a massive ramp up of inflation that's on the horizon.
Yes.
Which has been really playing to our basic materials, mining type of plays that we've been bullish on. It's telling us that people are expecting that the economy is going to, at some point, run too hot. It's going to run too hot, which means that the rates in the future are all going to be higher, including short duration bonds.
Sure. Do you believe we're in any danger of seeing serious inflation? I do believe. I
think it's here, baby. I think that the way that they measure it is so BS and antiquated. Yeah. Like, I don't know if you've ever, I'm such a dork like this. Like, I actually looked at the basket that that CPI is based on. Yes. And they're looking at like the price of toothbrushes, transistor radios, stuff like nobody cares about or buys anymore. And they don't think about the price of your rent. What a median price of buying a new home it costs. They don't think about things like how much college costs. They don't think about things like electricity, gasoline, like, the stuff we spend all our money on is not included in it.
No.
There's been this huge deflationary pressure on all the stuff, all the stupid stuff that they measure, because technology has just made it much easier to produce stuff. That's why, like, my wife goes to Target and she comes home with a bag for the kids of like 75 shirts. And I'm like, whoa, did you just spend $1,000? And she's like, no, it's $40. These shirts for 50 cents each. And it's like, oh, there's no inflation. But then everything else we're spending money on is incredibly expensive. Steak, milk, gas is starting to even go up. Rents everywhere. I mean, we own our home, but like, you know what you get where I'm going with this project.
Of course.
Even in this like travel COVID epidemic, try booking a hotel room in Orlando. Like I'm trying to take my kid to Universal. Like,
right. No,
inflation is here, baby. It's happening.
And if you're trying to build a house, oh boy, whew. Oh,
I'm trying to do a construction. I've been doing construction projects, and I'm trying to like book guys and get wood and procure this and procure. It's hard.
It's very hard right now. I talked to James.
Wait on everything.
Right. I talked to James West, and he pushed back doing that deck of his because he found that the lumber prices were as expensive as that fake lumber, the Trek or whatever it's called, the treated, the thing that lasts forever. He just said, I'm going to wait till this thing cools off. So yeah, I do believe. So where does this take us with commodities, Jeff? Tell me about the commodity markets. What are you seeing?
You know, the only I think that you're going to see, and I'm agreeing with you. I think the miners, I think like steel, copper, I think all like the economic commodities, X oil. Oil is the only one that I'm trepidatious about.
Yes.
Are going to explode. I think they're going to explode higher because I think you're going to see, you know, a rip roaring. We're going to, you know, what's happening in the world right now is like, it's a reorder, it's a reset, whether you like it or not. What's happening is basically every government in the world is expanding their balance sheet and coming up with public works projects and spending money and spending future money and borrowing more money. And they can because rates are artificially suppressed because they have negative yielding bonds in a lot of these places and low bonds in the US. But you have to be in front of that train. That's going to drive prices higher on everything, and it's going to keep going. Oil has even caught a bid. The difference between oil and iron ore and copper is iron ore and copper are rising on demand explosion. Right. Not supply constraints, demand, which for me is always a much more solid thing.
Huge. Yeah, I agree with you on that.
And the oil guys are just manipulating the supply. Demand is falling off a cliff with oil. It's still nothing. But they're really like squeezing production on oil. So I'd rather be with the demand side
than try to catch up on the supply. Of course.
That's what I mean by low hanging fruit too.
And if you look technically at the traditional energy stocks, you will find that most of them, on a technical basis, if you know nothing about fundamentals, most of them have gotten close up to the March or even a little bit below that level, and they're now coming back. They're coming back down.
Rounding out. Yeah. Well, here, do you like this is
airline stocks too? By the way, sorry to interrupt.
I just got to get this off my chest. I don't like to be at the mercy of like oligarchs or a cartel or a government, right? So when these OPEC guys get together, and you can think of them what you will, but they're a cartel. They're an international cartel. They can decide in the middle of the night at any point in time that they're going to open the floodgates again, and the demand's still not going to be there, and the price of oil could totally nosedive if that happens. And I foresee that happening at some point here because they don't like to play nice with each other too long. Because what happens is when oil stays at too high a price, so they have what's called an equilibrium band. They like it to be in a certain range. If the price of oil gets above that range, it's actually negative for the big producers like Saudi and Russia, because you start getting guys in Pennsylvania and Texas and North Dakota as competition.
Right.
They want those guys in business.
The opposite of what we saw, the opposite side of what we saw when we were going into the pandemic, when it was below $40 a barrel, when frackers couldn't make a cent.
But nobody's going to come out and say you can't produce copper, you can't mine copper. They don't have the same type of cartel organization for the mining stuff. So
so I'm agreeing with you, and I'm also another major sector just for our readers there that I'm doing. A lot of people have been asking me about the financials, and you and I have been, we've been beating to the same drummer now for about a year. And please feel free to disagree with me if you've changed your mind or whatnot. But I have completely separated the financial sector into subsectors. Yeah. And I'm finding that traditional savings and loans and companies that are involved in a lot of businesses are sagging and holding the rest behind. But consumer business stocks business stocks, financial stocks that are related to investment banking, to lending for residential construction. There's a subsector that's doing really, really well, and a subsector that's doing really, really bad. And if you can divide that, I believe there's a lot of opportunities in the financial. But we've been talking about this. Discover Card, I like.
Insurance companies are
insurance companies, yes,
that are doing really well with this yield curve steepening.
Yes,
that's another subsector that's really good. Like if you look at AIG, their stocks are on fire. If you look at the big insurers,
right. So those. So that is a sector that I like to divide and kind of separate into two. It's not just one, because there are some dogs in the financial sector and there are some winners. Before I let you go, what are some of the linked trades that you're looking at that you've closed out? Just tell us, brag a little bit. Tell us about what you're looking at, because, I'll tell you what, even if you give us some that you've closed, it gives people at home an idea of what they kind of get inside your head. So just tell us something. You don't have to give us the red meat, but just give us something.
Yeah. So I have that Canopy. I talked about that Canopy. So I'll give you the details of the trade. So
okay.
I recommended buying Canopy. I think it was January 19th around.
Yes.
Stock was trading around $32. It's at $50 this morning in less than a month. The stock. The options were at $4. I think they're trading around $18. The calls that I recommended. And I had puts I recommended on the other side. So we go long short. It's a pair trade. Not really doing much. Altria down 1%. So, my trade is winning by 1%, but that's the beauty of a money link is you're hedged against the market, and you're hoping that you're not hoping, hope's the wrong word. You're expecting that whatever market condition happens, if it's a bullish market, your long is going to really pay you. And I nailed the sector on that one. And if it turns bearish, my expectation is that an Altria is going to get pounded mercilessly. And the reason that that one is such a good one is there's a secular shift from consumption of tobacco into the cannabis space. There's a fundamental taboo with smoking tobacco-related products, and right now there's a good wind behind the back of cannabis support socially and philosophically and from the government. But then there's other stuff that I do. Like I did the home builders. I liked ETFs also because I didn't want single stock risk. It was earnings season. So when earnings season happens, I actually do the opposite in a lot of earnings seasons. Canopy was different because I expected them to get their stuff together, and they did. But, with the home builders, I had XHB. I had the XHB long, which is solid,
Very solid. Yeah.
Closed that out for 200% on the option. And right now I'm actually bearish on a financial ETF, not a particular company, the XLF. It's run really hot. It's been one of the best spaces. And I'm bullish on utilities. And it seems like a weird thing. Why would you be long the XLU, which is the utility ETF, and short the XLF? And the answer is interest rates. And I think interest rates on the front end, they're going to start to sag a little bit, which is good for utilities companies. But there's another thing. There's another wind at the back with the utilities company that's a low-hanging fruit. A lot of these, the biggest, if you look underneath the hood of XLU, their biggest holding is a company called NextEra. It's a Florida energy company, which is one of the pioneers of adopting solar and clean energy. If you drive through the state of Florida, you're going to see a ton of farms, solar farms. NextEra owns all those guys, and they're ramping up their dependency on solar and clean energy. And the stock's been ripping, and they're going to get federally subsidized. They're going to get more federally subsidized. Another low-hanging fruit.
One of my favorite stocks, by the way, NextEra.
Yeah, they're a phenomenal company. Yeah. I know guys up in Juno Beach, it's not far from me, they're executives at the company, and they're brilliant people. They're not dumb. Yeah. No. If you can find the case in a trade where you get multiple ways to win, I love that. I don't want just something that's only going to win if this happens. You need
well, that's why I keep talking about that company, Grow Generation, the pot equipment stock, that regardless of how the geopolitical climate's going to go, the industry's just getting bigger, regardless of Canada, Europe, Uruguay. The stock was at 50 last time you and I talked. It's at 65 right now, or 45 now. It's at 65 right now.
It's amazing. There's a lot of brilliant opportunities.
There's some good opportunities.
Momentum,
And I think you and I have covered plenty of them on this call. I mean, I think we gave plenty of ideas. I think this was
went over today.
We went over, but this was a great call. Jeff, I really want to thank you for your time, and thank you for being generous with your ideas, your picks, and the way you look at the market. I appreciate you giving it 100%. folks at home, if you want to reach out to Jeff Zinaneri, please do. Jeff does not bite, not usually. I'm just messing around.
Right.
Jeff@joyofthetrade.com. Jeff@joyofthetrade.com. And if you want to reach out to me, I promise I've got pretty thick skin, good, bad, ugly. Give us ideas, give us questions. We'll answer them here live. I'll read your name out loud. We're completely transparent. Support@marketgeeks.com. Support@marketgeeks.com. That's just a quick email to get a hold of me very, very quickly. Jeff, thank you very much for your time.
One last thing, guys.
Please.
Thank you, Roger. If this video also appears on YouTube, so if you like these videos, please subscribe to our Wealth Press channel, because there's a lot of other good videos like this.
Yeah.
Don't forget to do that. Click.
Yes. Stay ahead of the market and subscribe. Stay ahead of the market and be notified when we post a new video. Thank you for mentioning that. Yeah. And again, thanks, folks, for joining us. Jeff, it was wonderful. And I will see you next week. Bye, everyone.
Bye, guys. Have a great week.
You too. Bye.